Cathie Wood has been loading up on Zoom video communication stock. Now in this video, I'm going to take a closer look at Zoom video communications and why I think Cathie Wood is loading up on this stock here. Now Zoom video has been on my list of top stocks to buy, on and off my list of top stocks to buy all year long. I've been recommending Zoom stock as a buy for a while now, more than a year now, since the stock price has been down significantly. So let's look closer at Zoom and Cathie Wood's purchases of Zoom video stock. You can see.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
You can see here, November 22nd, Cathie Wood's ARK bought 30,000 shares of Zoom stock. If we go further, November 22nd, 167,000 shares purchased of ZM Zoom video stock. If we go further, you can see November 21st, 2,000 shares purchased of Zoom stock, 12,000 shares purchased of Zoom stock buy, and you can go on, and you can see continued purchases of Zoom video communication stock by Cathie Wood. Now, the stock is down significantly off its high, 86% down off its high to be precise, 86.34%. Innovative growth stocks are what Cathie Wood is attracted to overall in general. That's her investing philosophy. And more than a good percentage of those types of stocks have been down this year as interest rates have increased, putting pressure on these unprofitable growth stocks. But Zoom video communication is not one of those unprofitable growth stocks. It's generating profit. So let's take a closer look here. So if I was to look at Zoom Video's revenue over the trailing 12 months, you can see that phenomenal growth here. And let's zoom out a little bit further. Let's go back 5 years so that we could really see the explosion during the pandemic of when everyone was spending more time at home, working from home, learning from home, entertaining from home, talking to family members from home. And Zoom video communications really exploded during that time. Revenue went from less than $1 billion all the way up to over $4 billion. The interesting thing is that even in the aftermath of the pandemic, now that schools have reopened, people are going out more often, and people are back to work for the most part, Zoom video revenue is still explosively high, 4.46 billion. Revenue has not come down. That has been a surprising consequence. After the pandemic, investors were concerned that Zoom video's revenue would crash and fall down, and the fact that it's sustained at this level was one of the reasons why I had been recommending Zoom video stock and saying, like, look, this company has staying power. Billions of people learned how to use Zoom video during the pandemic, and that learnedness, that familiarity, that's a big benefit. That's hard to accomplish if you're a new company. You've got to get people to try your product, to learn your product. That takes time. The pandemic was heaven sent for Zoom because that just gave it an opportunity to introduce itself to hundreds of millions, if not billions of customers worldwide. And that's now built a switching cost where if a new company wants to come in and offer a similar service, they've got to get over that hurdle. Why would a company choose to go with anyone other than Zoom if it now needs to train its employees how to use this new service, whatever the new service might be, instead of Zoom? Because they're confident that the people that they're working with probably have used Zoom already and know how to use Zoom. So that time to train, that time to learn is negligible for people adopting Zoom. And so for that reason, I think that advantage that Zoom gained during the pandemic will be a long-lasting advantage. It wasn't just a one-time thing where it's going to go away. Sure, the business has changed, and let me show you how. Here I have Zoom's operating income. Now, this is what investors were expecting, right? The big downfall in the aftermath of the pandemic, but investors were expecting this with revenue and operating income, not just operating income. But what happened is revenue stayed high, but operating income fell. The reason for this, Zoom is having to work harder to make these sales now. During the pandemic, Zoom didn't have to lift a finger to make a sale. It just sent people to its website and said, go online and buy our service. Right? Zoom didn't take time to have its salespeople go meet with business clients and try and convince them to purchase the service, maybe offer promotions, offer incentives, discounts. They didn't need to do that, right? People and businesses were flocking to Zoom, so it didn't need to hire salespeople. Marketing expense could be lowered, and so it was easy for Zoom to generate revenue, easy for Zoom to generate profit. That's been a big change. Now it needs to work to make sales. It needs to send out sales staff. It needs to convince businesses to purchase. It needs to offer better terms, offer incentives, and say, hey, if you sign up for 3 years, we'll give you a 20% discount. If you sign up for 5 years, we'll give you a 30% discount, and maybe go back and forth meeting with the sales staff and on. And so this has driven costs higher. And so that's brought operating income down, but it's still significantly higher than where it was before the pandemic. Look at where operating income was in 2020, right? It's still significantly higher at 124 million in the most recent trailing 12 months. So still impressive that Zoom has maintained and sustained this profitability even in the aftermath. And the big thing is the downfall has ended. It has reversed the downfall and it's back to improving profitability. It stopped the downfall and it's ticking upwards again. That's been great news for Zoom Video stock investors. And similar story for Zoom Video with its cash flow from operations. And even in the most recent trailing 12 months, 1.261 billion in cash flow from operations, comfortably generating over $1 billion in cash flow from operations in trailing 12-month periods. Really good news. The company is still doing really well despite the fact that economies have reopened. Look, I'm still using Zoom Video, right? If you don't already know, I'm a professor at a university, and during the pandemic lockdowns, we were exclusively using Zoom to teach our students. Now, even in the aftermath of the pandemic, I still sometimes use Zoom to do lectures. I still sometimes use Zoom to hold office hours, right? So it's still a useful tool for, and that's just one example for university teaching university students, right? I'm sure there's plenty of other examples where people and businesses are still using Zoom Video even in the aftermath of the pandemic. So it wasn't just a pandemic company. It wasn't just built to operate during a pandemic. It's proving itself worthy. It's proving itself valuable to people using it even in the aftermath. Here's another thing I really like about Zoom stock, Zoom company overall. Look at what I have here in the orange is Zoom's total assets, right? Total long-term assets. I'm sorry, total long-term assets are in the purple, and in the orange is revenue. So Zoom has 1.87 billion in total long-term assets, and it generated 4.4 billion in revenue in the trailing 12 months. So from a base of 1.9 billion in assets, it generated 4.4 billion in revenue and growing. The company can continue growing without necessarily increasing capital investment in its asset base, right? The technology, the platform, the technology is innovative enough that it generates strong revenue from not so much investment, right? A multiple of investment to revenue. I like that, right? You've heard me say on this channel, if you're a returning viewer, you've heard me say an asset-light business model is an investor's friend. And this is one example of an asset-light business model. Total long-term debt, zero, right? That's clearly a sign the company has done well, self-sustaining, doesn't need to borrow money to sustain itself. It generates cash flow from operations on its own, doesn't need to borrow money, has zero long-term debt, and this is a good sign for investors. Finally, the last thing I want to look at here is Zoom's valuation, Zoom Video price to earnings ratio. The price to earnings ratio is an important financial metric I use to determine which stock is more expensive or if a stock is too expensive. Let me show you this example here. I have two stocks, one trading at a market price of $100 and one trading at a market price of $12. The one trading at a market price of $100 has an earnings per share of $2.58, while the other has an earnings per share of just 11 cents. When we look at their price to earnings ratio, the one trading at a market price of 100 is trading at a price to earnings of 38.76, while the one trading at a market price of $12 is trading at a price to earnings of 114. So in this example, the one trading at a market price of 12 is actually more expensive because I'm paying 114 times earnings to purchase this stock. That means if the company was to pay me earnings per share every year as a dividend, it would take 114 years for me to receive my money back. Whereas the other stock, it would pay me back in 38.76 years. Now, there's a lot more to think about in this equation, but to simplify, that's an example that shows you why a company with a market price higher can actually be cheaper than a company with a market price that's lower. So with that being said, Zoom Video price to earnings ratio of 13.97 is relatively cheap, especially if you look at its valuation going back to January of 2021. It was trading at a forward PE of over 90. So Zoom Video at a forward PE of 13.97 is a bargain in my opinion, and it's been one of the reasons why I've been recommending Zoom Video stock as a buy. So I can understand why Cathie Wood is buying Zoom Video stock. Typically, Cathie Wood is not one that focuses on valuation. More so, I've noticed Cathie Wood focus on innovative growth companies. Regardless of valuation, she doesn't mind paying expensive prices for companies she believes provide innovative growth that could explode over the next few years. But in this case, the stock is cheap as well. So if investors are interested in this Cathie Wood stock that's down 86% off its high, I do consider Zoom Video stock a buy, and it wouldn't be a bad idea, I think, for investors to consider adding Zoom Video stock to their portfolios. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of the subscribe button, you can get free financial analysis from a finance professor with decades of investing experience. So what are you waiting for? Hit the subscribe button.